Today we have a very special guest joining us, Jim Culver. Jim is an executive who has spent over 40 years in the fields of commodities, international trade, and trade finance, holding posts in government and academia as well as the private sector. Currently, Jim serves as the president and CEO for VVC Exploration, a publicly traded mining and exploration company on the TSX Venture Exchange. He is also the co-founder of Analog Gold, a mining investment company offering investors exposure to relatively low-risk physical gold projects with potential for substantial returns. Prior to joining VVC, Jim served as CEO of TPG Commercial Finance and Vice President of Commodity Trading and Finance at Merrill Lynch. Thanks again for joining us on The Rocks. Let's dive in. Thank you, Jim, for coming on The Rocks. It's exciting to have you here. We've worked together for, a long time now, and can't wait to dive in with you today.
Thanks. It's fun, and I love the motif and the program, and wish you the best in with Prospector.
Thanks. Well, first question, most important question. What are you drinking today, and why?
I'm drinking a Bellmead bourbon that is made here in Nashville. Nelson's Distillery was, before Prohibition, the largest distiller in Tennessee. And during Prohibition, the owner died. But his two grandsons, about 15 years ago, resurrected all his recipes, restarted the company, and now makes some actually wonderful whiskey. So I'm enjoying a nice glass of their sour mash whiskey.
Nice.
Bellmead bourbon.
I'm going to check that one out. I've seen that in the store, but I didn't know anything about it, so I'll have to grab one. I'm actually drinking scotch today, so a little bit different, the Balvenie Caribbean cask, and I'm drinking that because I actually got a bottle of this for David Cease when we did the Prospector acquisition by Analog as a thank you for all of his help. And I thought, well, I've never had it. I better buy myself some, just in case it's really good. So it's pretty good.
So yeah. Caribbean cask?
Yeah.
Does that mean that?
Yeah, they finish it in a rum cask. Yeah.
Okay.
So,
Bellmead bourbon has one. They finish in a rum cask as well. That's really good.
As does Basil Hayden. That's probably my favorite of all the ones that are done that way. It's really, really nice. But this one, it's got a little bit more of a vanilla hint to it. And it's a scotch, so it's a little bit harsher than my usual, but it's good. Hey, and being here in South Florida, you can't help but reach for the Caribbean cask ones. I guess me being in Florida and you being in Nashville, two mining epicenters of the world.
Yeah, right. Well, they have a lot of quarries here, but that's not the same as mineral mining.
Yeah, we've got some phosphate down here in Florida, but that's about it. Phosphate and coral quarries.
There was a time when Tennessee was a primary source of copper, and in fact, there's an area of Tennessee called Copper Hill, where around the turn of the century, the fumes from that copper refinery actually killed everything for about 50 miles, all the vegetation and everything. And of course, it was all shut down. It's only been about the last 25 years that people have moved back into there because it was so deadly for a long time. It's all gone now, but
I had no idea that there was copper up there. That's
yeah.
Well, I in particular, of course, there's lots of things that we could talk about, but I had no idea, even having known you for quite a while, that you were involved in some way or around the Silver Thursday market crash. So I thought it would be great for folks to hear about what that was. It happened back in March 1980, right? So it was a while ago, but it still impacts how silver in particular is valued and traded and has a lot of impact on the market today.
It does. There are a couple of things, if you want to read about it in detail, there's a book called Beyond Greed by, his last name is Fay. I think it's Richard Fay. But which is very well done. Or if you want a different version that's not as far along, the Playboy magazine in March of 1980 published right at the end of March, and they carried everything up through Silver Thursday and early that following week. And it's fascinating. It's a fascinating read, and it's a 10-minute read as opposed to an hour and a half or 2 hours on the book Beyond Greed. But two good reads on the subject, and they're fun.
No, I definitely have to check that out. And I imagine with the characters involved, the Hunt brothers, Playboy probably had a bit more of had an interesting perspective on what was going on.
Yeah, the Hunt brothers were a bit bigger than life, if you will. The bigger than life Texans. And the two people we dealt with were Herbert and Bunker was the one that everybody knew about and heard about. And Lamar was involved much less, and I guess one of the sisters maybe a little bit, but the two people we dealt with were Herbert and Bunker, and the one that I actually dealt with a little bit on a personal basis was Herbert. When on that Thursday morning, I was at that time the chief economist at CFTC, and the market surveillance unit reported to me, and so I was in the office early that morning. I'm guessing it was a little after 7, and I got a call from the chairman's secretary who said, "There's a guy by the name of Herbert Hunt on the phone saying he has to talk to the chairman, and the chairman's not here yet. Can you talk to him?" I said, "Sure." And I had met him 2 weeks prior to that when we had sat down to talk to him about their silver position and what they were doing. And so I took the call, told him who I was, and he said, "Well, I wanted to let you know we're not going to make our margin call this morning." And I said, "Well, why not?" He said, "Well, we're out of money." And I said, "Well, how much is it?" And it was something like $200 million.
Wow.
And I said, "My God, that's a lot of money." And they were always saying, $1 billion is not what it used to be. I think that was Bunker's favorite quote. But, I said, "Well, you guys have got all that physical silver. We know you've got 180 million ounces of physical silver. Hawk that. Pay your margin call."
Yeah, because at the time they owned like 30% of the world's physical silver, right?
Yeah. And they were taking, known in vault physical silver, and they were taking delivery every time the COMEX had a month in, they took delivery. So they'd establish a futures position and take delivery. People seldom did that. So they were cleaning out the vault in Chicago and in New York of silver. And so I said, "Why don't you hawk your silver and make your margin call?" He said, "Oh, we've already done that." I said, "Oh, my God."
Wow.
So
for Jim, for those who don't know, what is a margin call?
In the futures market, you buy what you don't want and sell what you don't have, I guess. But you don't pay for the product. You simply put up a good faith margin. So as the price moves against you one way or the other, you have to post more margin or more funds. So in their case, they were long silver. They had owned a lot of silver futures, and the price was going down, which meant that the value of their position was going down, which meant they had to add more money to their account. And the price had run up to, it had gotten almost to $50. I believe the highest print was $49.50, but it had gone in less than a year from about $5 to $49.50.
Wow.
And it was moving back down and dropped through 30 and then through 25. And on Silver Thursday, it was dropping like a rock, and was already in the teens when they called. So by the time, within 10 minutes or so after I got off the call, the chairman of the agency called and said, meet me out front. I'm in the agency car. We're going to the Fed, and bring a notebook and a pen. Okay. So uh, now I had been there, oh gosh, 4 months.
Mm-hmm.
So I was new to what we were doing. And so we went to the Fed, and we get there, and we meet the number two guy at the, well, he was like the chief of, well, I think he was chief of staff for the chairman. We meet him, and then the chairman comes in, and the head of the SEC comes in. He doesn't stay long, but the Deputy Secretary of Treasury, Carswell, came in. Carswell had been on Wall Street. He'd been in Treasury. He'd been at the SEC. He knew how regulation worked. He knew how Washington worked, but he also understood the markets. And now Volcker had been in office 2 months, maybe.
Oh, new also, yeah.
Brand new. and the chairman of CFTC was James Stone, I was in my 30s, and Stone was younger than I was, like 3 years younger than I was. He was under 35, and had been the commissioner of insurance in Massachusetts, was not known as a market savvy trader. Now, later on, maybe he turned out to be, but that wasn't his specialty. He was a regulator. So we go there, and it's, everybody's asking questions. Nobody has answers. We're on the phone talking to the office at CFTC, where we had a lot of information, a lot of data, and a lot of answers. And I brought our notebook. I brought the notebook that I kept with all the information on it. But, again, I was fairly new and didn't really know the ropes very well. But it was a fun day. A couple of interesting things about it. One is that you could see that Volcker would take a call from New York, and sort of depending on what he said, you could see the markets go up or down based on what he said on that call, because everybody was keying on what Volcker said.
Yeah. But
the fear was that this was big enough that it would take down one of the major banks. Continental Illinois, I believe, was one that they were the most worried about. They worried about several of the big banks, and they were certainly worried about the brokerage firms. Beige was the primary brokerage firm, or at least they thought they were, but it turned out all the brokerage firms had significant positions. And everybody is trying to dump their position as fast as they can, and meanwhile the market can't absorb it.
Right.
So the market starts out at about $20, and by noon it's at $12, and still heading south.
And what did the Hunt brothers do while this was going on? Were they just continuing to try to?
They were scrambling, trying to get somebody to agree to bail them out. They tried to get the markets closed and the price fixed at $20, and Base tried to do that. The commission, CFTC, and the exchanges all concurred that didn't make sense. So they were trying to get the CFTC and the exchanges to bail them out, and they didn't. So the price kept falling. That said, on the other side of the market, you had the big people who had been short, who are now able to cover and to come back in and buy. So you were beginning to see some buying as the market fell. It was a crazy day.
Yeah, and I mean, did all of these, stakeholders know that they owned that much of the market? Like, did people know what they were doing, or was it?
People knew what they were doing. They were very open about what they were doing. they were not open about who all was involved with them and how many people were involved. So there was a connection to the Saudi royal family who had a bunch of money in it. A Lebanese billionaire who lived and operated out of Brazil had a bunch of money in it. And the market didn't know about those people. They knew about the hunts, but even the hunts, they didn't know how big they were. They didn't know what their positions were. Because unlike the securities markets, the futures markets are not opaque in terms of position. So in the securities markets, if you have a big position, it's publicized. If you take more than a certain percentage of a company, you have to declare it.
Yeah.
That's not true in the futures markets. The only people who got that data were the exchanges and CFTC.
And has that changed, or is that still the case?
That's still the case. The change that was made was how much of a position you could have in a single commodity and how much control you could have. That was the biggest change that was made.
And they were banned from any kind of commodity trading after that, right? They were...
Well, I don't know whether the ban ever stood up or not, but they were broke after that. Maybe not completely broke, but they lost most of their. They lost Placid Oil. They lost, of course, all their silver positions. They had huge positions in the bond markets as well. They weren't just traders in silver. They had a huge position in sugar, big position in the bond markets, and all of those they were running through the futures markets, so you couldn't see it.
Oh, okay. And so was that, how much of that is these individual people were doing it, or this one group, versus was that the norm, or were they doing something that was really different from everybody else back in 1980?
Well, I don't think we'd ever seen anybody do anything quite like that before. We'd seen market. They cornered the market in silver, and they were running the price up. And they did a very good job of that. They were very open that they believed the price of silver should be $100. And they tried to buy Sunshine Silver, which is a big mining and refining company. They didn't get that, but they almost did. They bought some other properties in the business, but they genuinely seemed to believe that maybe they got to where they believed their own rhetoric, but they were talking the game of $100 an ounce. And this is from $3 an ounce 2 years earlier, and $6 or $5 or $6 an ounce 12 months earlier. So there were a lot of things that caused it to go up. We had inflation rising, uncertainty in the world economy, a whole bunch of things going on, and those all made sense for silver to go up. But once you went above about $20, silver began to come out everywhere. My office was at the corner of 21st and K Street in D.C. And you could look out across K Street, and down about a block was a Deke Pereira precious metals office, and they were buyers of physical silver. And you'd see people standing in line with grandma's silver.
Yeah,
standing in line to sell it. Because, they had bought it at the equivalent of $3 an ounce, and here it is at $30 an ounce. Well, let's sell that stuff.
Yeah.
And so silver, the silver supply began to increase rapidly. Interest rates began to go up rapidly. So the cost of holding the physical silver went up. The margin calls were going up because the exchange began, as the hunts got a tighter and tighter squeeze on the market, the exchanges were worried, so they raised the margin calls. So all of a sudden you've got higher interest rates, the higher cost of holding the silver, higher interest rates meant a higher cost of the margin calls as well, and you've got a lot of silver coming into the market.
And Jim, do you have a sense of why they chose silver? Was it because they thought it was really undervalued as compared, like, why didn't they do it with gold or another commodity?
Well, you couldn't. Gold was illegal to trade at that point.
Okay.
The physicals. In see, we were not too far away from Bretton Woods when the U.S. was decoupled. The U.S. currency was decoupled from the gold. It was only 8 years after that this happened. So there was still a lot of restrictions on trading gold. There weren't the same restrictions on trading silver. Okay. But the big thing, if you read some of the articles, you find that they got interested in silver because a broker, I think his name was Brodsky, who worked for Bache. It was Bache Halsey Stewart was the brokerage firm, one that no longer exists. He was at Bache, and he went to see him and convinced him that because of inflation, because of still at that point relatively low interest rates, because silver could be freely traded, there wasn't that much of it, that this is one that's going to go up. And the Hunts loved to punt. Okay. They were, Bunker Hunt, what is it? He drilled $250 million worth of dry holes in the 70s before he hit the big Libyan field.
Oh, okay.
So this guy's a gambler.
Yeah.
And he liked the idea, and when he went at something, he went at it big. And so it was Herbert and Herbert and Bunker were the two who were the primary players in it. Lamar was the operations guy. Bunker was the out front guy doing the deals, talking to everybody, and made the deal with the Saudis, made the deal with the guy in Brazil, had a couple of other people that he brought in to trade with him, and they did, in fact, corner the market. At one point, they had $5 billion of profits, which in 1980 was real money.
Yeah.
But they forgot one thing that's critically important. If you're going to corner a commodity market, you've got to have a way to get out.
Right. You can own it. But
you think about it, you can own it all, but once you own it all, who are you going to sell it to? Right. What are you going to do with it?
If you're the only one buying it.
If you're the only buyer, how are you going to get out?
Yeah.
And if you've got enough people that have to have the commodity, then it's easier. But, you don't have to have silverware.
Right. Yeah.
Now, you needed it for industrial usage and whatever, but it helped move us from using silver in film to move to digital.
Oh, okay. Well, and I had no idea that they were involved in the oil discoveries in Libya. I mean, these guys,
that was Bunker Hunt.
Family? That's crazy.
That's Bunker Hunt. Bunker Hunt did that.
Wow.
That was,
and that's tied in with Gaddafi and the whole, this is like.
Yeah. He owned 60% of that at one point, and then Gaddafi nationalized it.
Jeez. Yeah, they really should make a movie about this thing.
Oh, yeah.
Yeah. That's pretty crazy. And what did all of that do to the silver miners in the 80s? Like, how did it impact the actual mining industry?
So, let's talk about what happened to price first. So, price went from $3 to $49.50, back to $3 in the space of 3 years.
Wow.
And it stayed around $3, between $3 and $5 for the next decade. So you had people that had geared up to mine silver during that period when the price was going up, and for a while afterwards, that just didn't survive.
Yeah.
and it made a huge change in silver and who owned it and how much of it. And actually, probably the last, well, we had a run up in 2008, 9, 10, 11, 12 era, but the run up we've had now is the biggest since the Hunt era in silver prices. And silver had always traded at a certain in a certain range compared to gold.
Right.
That range changed. Yeah.
Yeah.
So it slowed down silver exploration. It probably took two decades out of silver exploration.
And that's why you see so many silver mines on the market right now that are starting to reopen, but they haven't really been touched since the 80s.
That's right.
Yeah.
And some of them hadn't been touched since before that.
Yeah.
Yeah, that's correct. That's Missoula is one of those.
Yeah.
That
right
you see.
Yeah.
Yeah, right next to one of our analog gold properties.
Yeah. Well, and I've seen a bunch of mines, especially here in the U.S., that people are going to and starting to open. My parents lived for years in Creede, Colorado, an old silver mining town, and around Creede, and then a few others that we know in Idaho and Colorado, where people are really starting to put money back in to open them back up. I'll watch it a little differently now, knowing the whole backstory and how that happened.
Well, and the other thing that's happened that helps silver open back, some of these mines back up, is the technology has changed to the point that it's not quite as dangerous as it used to be, recovering silver. Not as dangerous for the environment, and the technology of mining itself, particularly underground, is a good bit safer because we're now using a lot of remote controlled machinery.
Yeah, absolutely. No, that's a good point. And even just the ability to model the mines and build them out safer from a design and a development perspective, there have been a lot of changes.
Yeah, and I think we're going to see that those changes accelerate over the next 5 years.
Now, so today, or over the last day or so, there's been all this news about GameStop, right? The video game store chain, and how Reddit users have just kind of, I mean, it would be great to hear you explain exactly what's going on, because you were telling me earlier that it's very similar in a lot of ways to what happened with Silver Thursday, or some of the mechanisms are similar.
Well, it's a case of somebody on the GameStop story. It was somebody shorting the market, and it was the shorts were hedge funds were using short positions to drive the price of the security down, and there were several hedge funds involved, and they were fairly open about it, and from what I can tell, and I'm certainly not a securities expert, but from what I can tell, when those shorts like that start, others pile in, and you can have people selling more shares than there are actual shares even in existence, because of the way the market structure works. So the shorts piled into this one and drove the price basically to zero. And the Reddit users, and these are trading on the Robinhood platform, tend to be much younger users. Many of those were GameStop fans, you know, because the GameStop is where you bought your video games and all your equipment. I mean, that's where my grandson wants to go, is to buy stuff at GameStop.
Yeah. Yep.
So you have this group of millennials who are trading, and they see GameStop being driven down, and I don't know how it happened, but they began to buy it, and the word spread, and it's like this one group sort of piled in and declared war on the shorts. And it's really interesting because again, it's proving that no one or no one group is ever going to be bigger than the market. Even a government long run is not bigger than the market
Yeah.
in these big markets. And that's what's going on now. It's fascinating to me. It's the opposite direction of what the hunts did, but the result is the same.
Yeah.
You all of a sudden the rules of the game changed. In this case, the new change is all these people from Robinhood who came piling in and bought the stock. And
Yeah.
they squeezed the shorts to the point that the shorts, who were almost all leveraged and, leveraged anywhere from 2 to probably 5 or 6 to 1, the shorts had to bail. And when
Yeah.
they did, these people that bought the stock made a lot of money. Now, at some point, the price of those shares is going to go back and reflect the value of the company. I have
Right.
no idea what that is, but I'll bet it's not what it's trading for today.
Yes. Well, that's
But
been where it's at. Yeah.
it's made everybody sit up and take notice and say, wait a minute, the power in the market has changed. So these hedge funds are not all powerful anymore. And
Yeah.
they now have to watch out for a simple chat room that connects thousands of people who can pile in and bet against them.
Yeah, I mean, and it's using the technology platforms to mobilize people who probably otherwise would not have paid attention to what these hedge funds were doing, except for the fact that it was a company that they had a personal connection with, right, in some way, and felt passionately that it was worth something. It was worth more than what the hedge funds were trying to do, right? And I mean, in
Well,
a way,
and
activists, yeah, activist
and
mentality.
once they did it for GameStop, they've now piled in on probably a dozen more companies that were the big shorts. So you can look at some of these companies that their stock price has doubled or tripled in the last few days just because of what's gone on with GameStop and people looking around saying, okay, let's see if we can do a squeeze on the shorts on this company as well.
Yeah,
And to some extent, they're being successful.
that's fascinating.
And
I mean,
none of this is based on fundamentals.
no, it's all like, I mean, in a not so negative way. It's all like a mob mass, mobilization, right?
It's exactly that.
Yeah,
It's exactly that. And one of the questions is, will this have an impact from a regulatory standpoint? Will it have an impact on how the markets work? You couldn't have done this before how do you say that? Decimalization.
yeah.
You couldn't have done it.
The fractional, what do they call it? Fractional ownership, right? That's what. Yeah.
Because if you were doing fractions, computers won't do the fractions fast enough to do the high speed trading. They will do, so that's why decimals work so much better.
Yeah.
And then the platforms like Robinhood, which will let anybody trade basically for free, and it's set up so that anybody with a telephone can trade the securities markets.
Yeah. Now, there have been some bad news stories out there, though, about Robinhood, too, right? Where people who didn't really understand what they were doing end up owing like hundreds of thousands of dollars because of it they've gotten themselves into.
And in this one, we've got people who, a lot of whom didn't know what they were doing, who've made hundreds of thousands of dollars.
They all need to invest in gold mining. Yeah.
Well, here's one of the questions, Emily, is if markets are changing and the drivers of the markets are changing. So look at the generational change. The primary generation driving the markets for the last 30 years have been the baby boomers.
Yeah.
That is rapidly changing to the millennials. And millennials do things differently than the baby boomers did.
Yeah.
And with technology and changing technology, will that change the way the markets work? I suspect it will. I have no idea how, but I think it will change the way markets work.
And if I were to bet, I would say it would be, that it'll be disruptive events like this that will force the regulators to catch up. Much like with the Hunt brothers, I would assume it was the similar kind of like, oh my gosh, this happened. What do we do now? And because the technology is just evolving so fast, and it allows people to do things that are so different than what they were able to do in the past. So you have to keep up.
And remember, regulators react to past events. So you're fixing the problem that you've just gone through. Yeah.
Not looking ahead to what the next problem might be.
That's right. So we fixed a problem with decimalization, but we didn't know what other problems that would bring on.
Yeah.
And remember that the securities markets were originally developed to raise money for companies. But mostly what they do now is just an avenue for trading.
Yeah, which is a challenge if you're a company. I mean, I think in a way what we see like with the GameStop incident is people still care about the company, right? Like in general, people have a connection to a company or a product, and there's a bit of a disconnect between how the market maybe values that company because of the trading versus how people value that company or that product. And people can get really pissed off if the market
they can.
And people they don't like the company you like.
Sometimes when you look at just the numbers in a company, you forget the value of the name of the company. And I think that's a big thing that's happened in GameStop.
Yeah, people have I would guess, almost a nostalgic attachment to the company.
Oh, no question about that. If you read some of the posts, and I haven't read many of them, but I read a few of them, they're very nostalgic about GameStop. One of the intriguing things to me is there a way to get millennials to be interested in mining and investing in mining, because they have money to invest, and we need investment in mining. Mining desperately needs investment, and the technology needs mining.
Yeah, absolutely, and that's where you and I have talked a lot about. Part of what Prospector looks to do as a platform, and of course, Prospector is wholly owned by Analog, the company that you run. Is talk about mining and mining investment in a way that we can encourage millennials and other non-traditional mining investors to get involved. If you care about the low carbon economy of the future, you have to care about mining, because all of that stuff is made out of metal. If you care about impact investing, then invest with mining companies that are doing things the right way, right? And put your money behind good initiatives.
That's right.
Care about water, right? Same thing. You can have so much impact in the world by investing in mining companies that are doing things in line with your values and for the future that you really want as a young person.
Yeah, so maybe we need a Robinhood focused platform focused on mining investments. Maybe that's what you need to do next in Prospector, Emily.
Absolutely. I'm going to call them up. Say, get all your folks mobilized. Yeah, but it's always interesting to me that when I talk to people, they're comfortable investing, or even at a Robinhood level, so fractional or decimalization investing in technology, for example, Tesla, other stocks, but they don't necessarily understand how it all works. It's complicated, it's technical. But they don't let that stop them from investing in the company. But they will when it comes to mining, right? For some reason, there's still a barrier there that we've got to, as an industry, figure out how to break down in order to really get people to get into it.
Yeah, the interesting thing, you mentioned Tesla. So a Ford standard gasoline engine car has about 25 pounds of copper in it. The top of the line Tesla has 120 pounds of copper in it.
Yep. So if you like Tesla, buy copper.
If you like EVs, buy copper.
Yeah, Absolutely.
If you want to, if you want an economy that's based on electricity and not based on
Fossil fuels and
fossil fuels, you better buy copper
yeah.
because you've got to transmit it.
Yeah, absolutely. And I think that will happen, but I think it's part of it is how, as a geologist, I know that when we talk about mining and geology, we use big, complicated terms, right? And it makes it sound really intimidating. And that's where I always tell people, all we're really doing is breaking big rocks into small rocks and sorting them out. Right? Like
Right.
you can get as technical and complicated as you want, and that's great. Like get involved in the science and do your due diligence, but don't be overwhelmed by the technical part of the industry because we've been doing this for, hundreds and hundreds of years, right? I mean,
So no reason to be intimidated by talk
right.
about a Merrill-Crowe flotation system to get your gold out, right?
That's right. I mean, if we could do it in the 1800s in California, I mean, by gosh, we can do it now, right? So
That's right.
yeah,
That's right.
yeah. Well, it is amazing though. On the, you see the technology dramatically impacting how people invest in the market, and we, of course, working day to day with mines, see how technology is impacting how you find assets, right? With all kinds of AI applications. We use predictive analytics now within Prospector, looking all around Mexico to see where predictive AI forecasts different kinds of minerals. What would you say is the technology that is needed the most to bring the industry kind of into the future? Where do you see a big gap?
Oh, there are a lot of gaps. One of the things that I'm most interested in is the safety and the technology that's available with to use underground to make sure that these mines are safe. That's a big one. And then the technology changes in terms of preventing pollution in the environment. We now have some technology where we're using microbes to process gold out of ore. There is now technology to mine copper out of the ground in situ by leaching it out of the ground without ever digging anything.
Wow, yeah.
And it's, these are early stage, but they are things that are happening. We're using more and more remote controlled equipment underground. We're using more and more technology to actually find mineral deposits using drones and the technology mounted on drones. It's there's so much technological change happening in the mining business right now. It's hard to keep up, particularly for an old guy like me.
Stop. The rest of us are just trying to keep up with you, Jim.
Right.
No, and that's where, I mean, I get so fascinated by what we would call like a mining futurist portfolio, things like space mining and deep sea mining, because I think, it forces you to think about metals and extraction and discovery in such a different way. So all the things that you just listed, how can you apply those to asteroid mining or mining manganese nodules off the ocean floor? And then once you figure that out, what can you take from that and apply to regular mining, right? And what kind of technology leaps might we have because we've figured out a way to leach minerals out of the soil on the moon, right? Instead of having to actually dig mines. I mean, it has the potential to really create some amazing technology advances, both in how we do the mining and then how we use the metals, if we can get people excited about it.
That's right. So there's a huge amount of opportunity for the use of technology, and of course that's why we were so interested in Prospector, and why we're so happy that you're part of the Analog Gold portfolio.
Well, that and our gold mine is in such a beautiful part of Mexico.
Well, that does help, doesn't it?
That doesn't hurt. It doesn't hurt to be in, the resort destination of Mexico.
It's the first time I've ever gone to a commodity project where we stayed in a resort.
Yes. I like to call it Project One in our fruity cocktail portfolio, right?
That's right. That's right.
Have a fruity cocktail by the beach. Half an hour later, be checking out your gold mine inland. So I think we should build on that. Yeah.
I think that's a great idea.
Well, with that, Jim, thank you so much for coming on the rocks, and of course, look forward to having you back. And I learned a lot about Silver Thursday and its impact, and it's really neat to hear how all of those issues and lessons learned have impacted the industry today. So thanks again.
Well, thank you, and it was fun.
All right, and cheers. Thank you to our guest and my colleague, Jim Culver, for joining us on this episode of On the Rocks. To learn more about Jim and VVC, visit www.vvcexpl.com and check them out on LinkedIn at VVC Exploration. For more about Prospector, go to prospectorportal.com or check us out on Instagram at ProspectorAI and LinkedIn at ProspectorPortal. Thank you for joining us on the rocks. Until next time, keep your glasses full and your ice cold.